The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Friday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and we kick things off in positive territory. We got the S&Ps right now. You're up by 21 points. We're coming right into where we were yesterday morning before that market had a little bit of a sell-off. We're at 58.71, up by about 1/3%. NASDAQ 100. Pretty similar territory, right? Right back to where we were at about 9 a.m. Eastern Time. Talking about 400 points down yesterday, and we get it all back from yesterday afternoon to the overnight session. We're up by 112 points, just more than 0.5% in the NASDAQ 100. Dow up 108. That's 0.25%, 42,714. And the Russell up about 0.5% as well, trading at 22.41. You got crude this morning. We were just at $70. The lows of yesterday as well pre-market. We're trading at 71.02, up 83 pennies. We got the gold contract. We were lower, a little bit of a bid. You were all the way down to 27.30 early this morning. We're up right now, technically negative $7 on the session. Gold trading at 27.42. And notes and bonds, we're chopping around right now. You got the 10-year positive by 3 ticks. We're trading right now at 111.12, and that's correlating to a yield of about 4.18% on the 10-year. We jump over to that dollar index, DXY. So, the dollar, negative yet again. Not a huge move, but it is interesting when you take a look at this thing on a daily. First big move yesterday we've had in a while, right? Yeah, you could say we had one on October 18th. We get a little bit of a pullback. We're going to take, it's going to take more than this, okay? This is a little bit of a chop area in the dollar. You're talking about from about 104 to 104.80, almost 105, and the highs out there hanging from early July, late June of 106. We've paired a bit. You got a little bit of dollar weakness out there. We have a 103 handle. A couple days ago, we were almost pushing towards 105. You made it to 104.57. We're at 103.96 right now. So you got yields pulling back a little bit, right? We did have the 10-year approaching 4.25%. We're now at about 4.18%, the yield on the 10-year. The dollar has pulled back a bit. That has allowed the gold contract. We'll pull it up. Yeah, to chop around a bit. We're just off the highs of 27.72. We're trading at 27.41. And yeah, pretty similar action, right? You have yields chopping around near 4.2%. We have the dollar chopping around at about 104. And you got gold chopping around near about 27.50. We'll see if we get any divergences today. You jump over to silver. That was quite a move we had recently. Silver trading at 33.71 right now, pulling back from about $35 a couple days ago. All right, what do we got going on this morning on Friday action? Well, you got Larry doing live trading right now. If you're interested, folks, he's in that room. I was in there earlier. They're getting ready. I know Larry's getting ready, that's for sure. We jump over to Apple shares. So, the story out here for Apple. Be careful of the super cycle, folks. Apple, yeah. Basically sitting near all-time highs, okay? 230.57 for Apple shares. We jump over, and what's the story here? Apple gets a sell rating. What? Well, it's just one analyst, okay? But this is some of the stuff that we've been talking about. I talked about myself. Listen to yourself occasionally, folks. Occasionally, okay? Anecdotal evidence is not always indicative of future behavior. That should be another one on the disclaimers, right? Past performance, not always indicative of future performance, or however that disclaimer is always at the end of every single financial disclaimer that you sign. It should say anecdotal is not as well, but sometimes it is, folks, okay? And I'm not the only one I talked about. I have an iPhone 12, all right? And it's interesting that just recently, so I have the old Apple charger, right? That Apple, whatever the C charger. No, it's not the C, whatever they call the Apple charger. And now it's all USB-C, okay? So I think on the 15, they went to USB-C. I'm almost in the old age of Apples at this point. They're coming out with a 16. I got a 12. I was ready to go. I was ready to upgrade, and I said, you know what? I don't have to get there yet. My phone's fine, okay? My phone is fine. Nonetheless, Apple gets a sell rating as unrealistic expectations turn KeyBank bearish. The broker sees unrealistic assumptions for Apple's 2025 growth. iPhone 16 sales may be hurt by updated iPhone SE. Now, that's the first time I've heard that. Because when I think about it, folks, I'm going for the big phone when I do, right? I use it for everything in my life. I like the big screen. I need the memory. I want the AI capabilities. So I'm not going there, but if that's another component of people that might not need that type of an upgrade, I mean, a 12 is great. There's a lot of people out there with an iPhone that have an iPhone older than a 12, okay? So it's one analyst, okay? Brandon Nispel, no idea who this gentleman is, but he downgraded him, and that's a big downgrade. You know you're going to make headlines, and, you know, buyer beware of information, okay? You have to know that you're going to get a headline when you talk about selling Apple, the biggest company in the world, okay? The company has 39 buy recommendations, 18 holds, and 3 sells. The target that he put on it is $200, which is, what, 15%, 13%, something like down from where we are, 13%, there it is, down from where we are right now. And yeah, you look at the sell recommendations, okay, it's been higher. We were up to 6 at one point. Earnings season is underway. Yeah, you say so. Apple reports on Halloween. Yeah. iPhone sales expected to rise. There are good signs about performance, with sales up 20% in their first 3 weeks in China. While the market's expecting an acceleration of revenue growth for Apple, the analyst points to historical data noting that Apple has only seen growth across all segments at the same time just once in the last 10 years and twice in the past 20 years. From a geographical standpoint, the company has only grown all 5 of its target regions. It's 3 times in the last decade. It's really hard to grow it all. And they're talking about, you know what, this might be a tough one. The revamp may not be net additive to sales of the iPhone 16, pointing to data from a recent consumer survey, okay? Respondents had strong upgrade intentions. They also showed interest in the iPhone SE. We think investors are overly optimistic on unit assumptions given the view around the SE being additive to sales. As our work suggests, it's more cannibalistic, okay? With Apple trading at a large premium to history versus peers, we think the stock is likely to underperform and needs to significantly beat expectations to move higher. Folks, the expectations are already sky high on Apple. That's the tough part about this, okay? You take a look at this chart, almost doubling in price in less than 2 years. A company the size of Apple. You were just trading at 124, and that's not cherry picking. It kind of is, but you're taking the low of the beginning of 23. You're taking the lows of 2022. You back it up even further than that. Okay, and yeah, I'm not cherry picking the COVID low. You cherry pick the COVID low, okay, you're up 4 to 5 times. Even from where you came into COVID, Apple is up 200%, okay, 3 times the value of what you came into COVID there, okay, and 125 is where you are. Expectations are sky high for Apple. And I'm one of those people that planned on doing it. If they had surveyed me early on, I would have said, I'm doing it, man. I'm getting an iPhone 16. I'm getting the good one. I want AI. I need a little bit better battery. I would have said it all. And guess what? Time has come, and I'm not doing it. So we'll see if it happens. Apple's going to be fine, but expectations are a little high, and they get a sell rating as we kick things off. But guess what? They get that sell rating, folks. And with that, they're almost back to flat. So we'll see how we trade today. Stay tuned, folks. We're coming back for the open on Friday trading. We'll talk a little bit of Tesla. We got some other equities as well. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. Markets in the positive. S&P's up by 25 right now. NASDAQ 100 up by 130. And yeah, so Tapestry and Capri. It's not getting done, folks. And the market likes it when Tapestry isn't going to spend the money. But boy, they don't like it when Capri is where they were going to spend that money, and they're not going to be allowed to from the FTC. And the judge overrules that one. And as usual, everyone's got an opinion. And I got it. And we'll see how this shakes out. Capri, though. How about that? 50% wipeout, man, from $41 to $21, and you get over to what we're talking about here. Where are we? There we are. So, a judge blocks Coach-owner Tapestry's proposed acquisition of Michael Kors' parent Capri out there. It was an $8.5 billion merger that was announced last year. The deal has been sold after the FTC sued to block it, and a judge has granted their motion for a preliminary injunction to block the proposed merger. Now, their decision is under seal. I think that will become public, okay? But it's not available just yet. And, you know, it is interesting when you think about, of course, first thing is, you know, and I agree with you, Jimmy, man, in there, you know, talking about handbags, it's a tough one when you talk about it in terms of, is it really monopolistic when you have these two companies? But I was listening to a great Bloomberg, I think it was a Bloomberg law discussion. If you ever listen to Bloomberg radio, right, they have great discussions sometimes of Bloomberg law. And they bring it in and they just discuss cases. And I was listening to a discussion of this case. And they were saying the same conversations you can have right in your head right now, right? They were saying, okay, you got to be kidding me, right? You got to be kidding me that somehow handbags that they can have a monopoly over. When you think about the competition, you think about retailers on Amazon, you think about mom and pop shops on whether it's Pinterest, whether it's on Amazon, whether it's on Shopify, etc., that have the ability to start up, compete, make those bags, etc. Okay? The other side of that is they were going to have a complete lockhold on this market when you look at some of the brands that they had. I'm trying to get them. Where are they? Come on. We got 6 brands in here in particular. Here they are. It would put 6 fashion brands under one company, okay? And that's talking about Coach, Kate Spade, Stuart Weitzman, Versace, Jimmy Choo, and Michael Kors. That's where things do start becoming a little bit difficult, folks. Okay, now, there's always a fine line. The devil's always in the details. But we'll see how it sorts out. Nonetheless, this one's a close one, okay? And that's what we're going to have, close ones. This one's a close one, and I understand it. That's just my own opinion, but it's a close one, right? This is not Facebook buying Instagram, which should have been blocked. You can see the monopoly they have across the board, etc. They were just straight out buying a competitive force in the market to make sure that they maintain their monopolistic role in social media. And to a certain degree, it's not hard to imagine that you bring all those brands under one house and prices won't be as competitive. They won't have the same incentive to innovate, etc. Those are the arguments being made. And not hard to imagine that some of these brands would be competing against each other, okay, when you look at it in that way. Yeah. $8.5 billion merger. Nonetheless, it's not happening just yet, but as we know, that might not be the end of things. We'll see how they go. That one's a close one. Handbags, yeah, not exactly a dire situation of monopolistic tendencies, especially when you compare it to some of the likes of big tech monopolies, which is much more harmful on certain things, okay? All right, what else do we got going on? Let's talk a little bit E. coli. So you got Yum Brands and Burger King pulling onions from select restaurants after that E. coli outbreak. You better believe it, man. So you have onion products by Taylor Farms. Watch out for them, folks. I'd stay away from any of those onions on any of those sandwiches right now. As we know, this E. coli deal, that Chipotle episode that they had 10 years back or so, yeah, we know. Sometime, remember that? Just kept popping up. Nonetheless, you jump over to McDonald's shares right now. You got Mickey D's. There was their acceleration that was just Tuesday. You're back to 301. Not bad. Only a 5% hit. Now, if they get things under control, this is going to be nothing like just jumping around to Yum. This is going to be nothing like Chipotle if they get it under control. But from a risk-reward perspective, all right, we talked about this, man. You take a look at McDonald's. Risk-reward perspective, you're basically sitting at the upper trend of a well-defined channel, and I love McDonald's, folks. McDonald's, look at this company, okay? They are a great company. Mickey D's ain't going anywhere, all right? But from a risk-reward perspective, on a short-term basis, when you're in a channel like this and they find out they've got an E. coli outbreak and you're at the top of that channel, if you ask me where we going, I'd say we're probably going to the bottom, okay? Risk-reward-wise, I'd just be careful in McDonald's right now. Long-term, you're fine. You're trading Mickey D's, man. You're only down by $15 on this news. Are you going to McDonald's today? Now listen, if you're a creature of habit and you're living McD's and you're not eating quarter pounders with onions, yeah, maybe you're there. But if you're not, I think it's going to impact demand, at least for a month or so. And I'm just generalizing, but there's no way that doesn't translate into people's minds when you think about that type of sickness across the board, etc. Right? There you go. All right, what else we got going on? Yeah, we talked about Capri. We talked about Tapestry. We got some other equities, of course, during earnings season. Let's go back to a short-term time frame as we got about 5 minutes to go until the opening bell. What's Capital One? Yeah, COF. Capital One, they're out with their numbers, and they're higher. Yeah, earnings, $4.51 a share on revenue of more than $10 billion. The market was only looking for about $3.76 a share on $9.86. And credit losses, okay, $2.48 billion. The market was looking for $2.83. That's encouraging, okay? The market was thinking that provisions for credit losses were going to come in at almost $3 billion, $2.83, and they actually come in at 2.48. Always nice to see that they're not factoring that everyone's going to default. We'll see if that plays out, though, of course, right? All right, how about Skechers? SKX. We were talking about Skechers earlier in the week with retailers trying to differentiate themselves. If you missed one of the programs earlier in the week, folks, there are 5 less trading days this year. Excuse me, not trading days. Listen to me. There are 5 less shopping days between Thanksgiving and Christmas, just in a quirk of where the calendar goes this year. Okay, where Thanksgiving falls on the calendar to where Christmas falls on the calendar, you have 5 less shopping days, and these retailers are going to have to try and push it, man. But you got Skechers, and they're delivering today, man. They're higher, and you got Skechers talking about their earnings forecast higher than what the market was looking for. They're looking for about $4 to $4.25 a share for their full year earnings. The market was previously looking for about $4.08 to $4.18, so they deliver with some numbers. Analysts were somewhere in 417, so nonetheless, they guide to the upside, and we take a look at the longer-term chart of Skechers. You're going to open at about $65 right now. $70, probably your next stop on Skechers. Check back in on Apple as we come into the opening bell. Apple almost clawing back those losses right now. We're trading at $229. Amazon's in the positive this morning. Check it out, pushing 187. We'll come back, folks. We'll talk some Tesla. We'll talk some other equities. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the stock market open. You get the S&Ps up by 25 points right now. We're over where we were at the beginning of yesterday's action, but we got volatility in these markets, as we know. Look at the last couple of days, right? Wednesday, you drive down, you get a bid. Thursday, you drive down, you get a bid. Tuesday, we had an acceleration lower. We get a bid. Monday, you had an acceleration lower. Each day, you just kick off the day with an acceleration to lower, but not today. We're catching a bid right now with the S&Ps up by 0.5% at 58.77. NASDAQ 100, we're up by 136 points. We jump around to some of the big dogs. Apple shares. So much for that downgrade of that one analyst, right? Maybe he's wrong. That's what the market's saying. Apple shares. We're flat right now. The market is positive, but Apple, yeah, we'll call it flat at 230. We jump over to Amazon. Look at that, up by 1.2%, man. You jump over to NVIDIA, up by 0.6% for NVIDIA shares right now. Microsoft shares in the positive by 0.7%. Google shares right now in the positive by 0.7, and we jump over to Tesla shares. Excuse me. Slight give back of yesterday's action, but boy, really no give back when you think about this. Thing was at 214. You trade to 262. You're off $2. Okay, flat after trading up $50 to 262. Remarkable acceleration for Tesla. Now, it's amazing how, not amazing, interesting how more and more business and politics seem to merge. Okay, and that's okay because politics drives policy, which drives business. And so we try and keep the politics out of the den, but you can't keep it out of the den because many political decisions shape the future of regulations, businesses. You're seeing it with the FTC right now. Okay, you're going to see it with energy policies. You're going to see it with taxation. You're going to see it with tariffs, etc. So they all come together to a certain degree. And what's interesting here is, man, so first you got, this is an interesting one. Let's go over this one first, okay? And this is where you get, and listen, this is a Bloomberg piece. Everyone's going to have their bias, okay? Here is Bloomberg's take. But it's a much better take in terms of actually looking at some of the policies versus just talking your own book of your bias, okay? And what they're talking about is, what are going to be the differences here? What are the industries that are going to be impacted for the differences of these two candidates, okay? And they go over some of the ones that you're going to know about, whether it's big banks. All right, if Harris is in there, they're going to look for the Basel III Accords. All right, that's going to be a higher capital requirement. Folks, if you lived through, which many of us did, that banking crisis of 2008, it's amazing how quickly we all forget what happens, right? It's amazing. The banks all say they're fine. That's what Bank of America looked like back then, okay, from $55 to $2, right? I mean, even the likes of JP Morgan, we go from, zooming in, okay, $50 to $14. Okay, and I can go on and on and on. We all know the deal. Okay, Citi. Oh my God, look at this one. Citi from $500 to $10. Okay, the point being, if there's one area that I am okay with increased regulations to make sure that they don't reverberate around the entire economy, it might be banks. All right, there's my perspective on that one. All right, yeah, but if Trump's in there, that's not going to happen. So if you're looking at banks, right, you're looking at the election. You're making a decision who you think is going to win. Well, yeah, Trump is in there. There's a very high likelihood, okay, less regulations on that financial sector across a range of other ideas. Healthcare, you look at the big healthcare companies. You're talking about subsidies for those companies, the healthcare insurance companies this is, okay. Centene, United Health, they're going to have a $25 billion revenue drop if those subsidies are not extended. Harris would extend them. Trump would not. I'm generalizing, okay? You get into EVs, and this is the best kicker of them all, man. It's just amazing when you look at that Elon's right there with him. And listen, Elon's credit, man. He says he speaks his mind. Maybe he does. He says he speaks his mind, and no one's going to tell him not what to do, even if he's CEO of the biggest electric vehicle car maker in the whole world. But he is out there as a proponent for Trump. And what's remarkable is that you got Trump out there is going to limit all those regulatory changes, okay? When you're talking about whether it's EVs, whether you're talking about the $7,500 new vehicles or the $4,000 for new, okay? Trump has made his goal clear. He promises to end Biden policies favoring EVs on day one. So interesting. But hey, that's where we are. That's where we stand. That's where you go for EVs. When you talk about retail, how about tariffs? Now, this one, you know, you can get your own deal on here, okay? On a longer term basis, yes. We all believe on limiting the power of China and on U.S. jobs. But folks, I feel like a lot of people who are in the Trump camp are upset over prices, justifiably, okay? And I don't know how this is going to play out on a longer term basis when you look at just some of these anecdotal cherry pick numbers of what we're talking about here, okay? You're talking about 10 to 20% duty on all imported goods and 60% on Chinese products. Do you hear that? 60% is the duty on Chinese products, and a trade war cycle of retaliation and response could follow. Now, retail is uniquely exposed because the tariffs would involve a broad swath of goods. Now, check out this. 97% of clothing in the U.S. is imported. You like clothes? Those prices are going up. 98% of shoes and other footwear. You like shoes? They're going up. Okay? 90% of consumer electronics in other countries, imported. 10 to 20% on anywhere else, 60% on China is the number out there. Now, you just want to talk about China? Let's talk about China, because that's the number that's really coming. China, more than a third of imported clothing, more than half of imported footwear, 79% of laptops, 78% of smartphones, 87% of video game consoles. All right? Prices are going up, folks. Get ready for it if Trump is in office. If you're okay with that, that's one thing. If you think that's the best thing for the future, I get it. Make that case. You may be right. But prices are going up if those tariffs come in, okay? My dad, he was importing things from China. And I heard that, what was it, the vice presidential debate, I think, when I think it was Vance talking about if you're importing slave labor and all this stuff. Folks, you know, you're importing goods from China, all right? It's not like you're tallying slave labor on that case. We can all, you know, the devil's always in the details. There's always nuance. But just so you know where that goes, that was somebody like my dad importing goods, building materials from China. That's going up. That would translate to what? That would translate to the price of housing going up. That would translate to the price of rents that my dad was charging for some of his homes in St. Petersburg. And then, of course, you got energy. And we all know that one in terms of, whether it's clean energy, whether it's permits for natural gas, etc., and the regulations limiting carbon dioxide emissions from coal and gas-fired power. So they all keep doing it, man. Yeah. Jimmy, I agree with you, man. You know what? The best way, though, and this is where he's talking about, you know, are about keeping and bringing jobs to the U.S. Well, we can have all the jobs in the U.S. We'll just make sure we make them here. And everything's going to cost a lot more money if we do that when you're talking about things like clothing, okay? That, you know, you're talking about things like footwear. You want to start assembling footwear in the great old United States of America, you're not going to be paying the prices that you're used to, folks, because that is the deal. Yeah, it's going to bring all the jobs back here, and everyone's going to have to pay those wages that we're not used to paying. They're two separate conversations. You're exactly right. Tariffs are about keeping and bringing jobs back to the USA, a negotiation leverage. And the way that that's going to happen is they're going to make sure that China goods are more expensive because American goods are more expensive, and therefore they become competitive. But across the board, everything's more expensive. Therefore, we can compete in America. That's your choice, folks. We're going to finish this up. We'll come right back.
TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps up by 28 points right now, trading at 58.77. Markets in the positive, man. Amazon up by 1.25% right now. Apple gets back into the positive after trading down about $3 in the pre-market. Jump over to those Tesla shares. They're extending that gain. I was talking about it yesterday, man. You know, in the longer term, expectations are sky high. But the moment this thing popped yesterday, you're pushing 245, you're pushing 250. We're up at where it's going to be, folks. All right, 265 to 270 is the price point, the Tesla, and it came into it quicker than you may have even imagined, folks. All right, and that we're now making a quadruple top. Quadruple top, man, is where you're at right now on that 263.89 area. Now, it's so interesting how politics get everything, folks. All right, you get them all riled up, but you know, let's continue the conversation because it extends to. All right, you talk about Elon, you talk about Trump, you talk about tariffs, you talk about EVs. All right, but then the story out here as well. This one's out here from yesterday, last night. Okay, and it's so interesting how all of this stuff in the context. I say context is so important, folks. Okay, context. In any other universe, try and take your bias out of things. Try and say to yourself, all right, if the political party that I didn't like was doing these things, would I be okay with it? Instead of just, you know, the end is worth the means, right? I don't understand this one at all. You got Elon Musk now having private conversations with Putin to the degree where you even have Putin trying to hit up Elon to influence international relations with one of our greatest foes, China, right now, okay? You have, that Elon has been talking it up with Putin since late 2022, all right? This is confirmed by U.S. and European officials. Now, this just ties back to Tesla in the same way, man. I don't understand how you get so much leeway for a public company when this, you could very easily make the case that you're undermining U.S. government policies when you have the president of Russia speaking out to the richest American in the world, the richest man in the world, and asking them for favors that would greatly influence international policies with one of our adversaries, yeah? And he is talking about whether it's avoiding activating the Starlink satellite over Taiwan as a favor to Xi. Okay, so Putin is asking Elon to do favors for Xi. Okay, it's remarkable, folks. All right, I encourage you to check it out on the Journal. That's a piece they put out there last night. And what they talk about here is, Yeah, he's got a bunch of secrets, folks. He should, because he runs a mammoth space company, SpaceX, which operates Starlink. Okay, they got multi-billion-dollar contracts that they're running out there. Yeah, so it's an interesting one, man. Not that surprising, but I feel like if anybody that you didn't agree with politically was doing the same thing, yeah, you might have a problem with it. And I'd be hard pressed to say that if you are a Trump fan out there and you heard that Kamala Harris and Tim Walz has been having discussions with President Xi and President Putin, what would you say? I think you know what you say, okay? It's a remarkable thing, okay? It should not be happening, folks, in the best interest of the country, all right? It should not. When you're the richest person in the world and you have that type of influence and you're having private conversations with Putin and he's asking you for favors that undermine U.S. policies, I don't understand how you square that one in your own head. That is a completely separate conversation from Trump and tariffs. The beauty of politics, folks, all right? Now, this is getting to it, is that's great. And like you said, Jimmy, you're exactly right, man. Okay, it's all about bringing jobs back to the U.S. and negotiation power. It is. There's a risk reward for everything. You want to make that risk reward, you may be right? You make that decision. You know what you're voting for. You're willing. They're talking about in the den. They're willing to pay higher prices, okay? But guess what? I disagree with pay a bit more short term. Folks, you can't make everything that we use in the U.S. by paying, quote unquote, a bit more in the short term, okay? If you want factories in the U.S. with livable wages, then you're going to pay an inordinate amount of more money for some of those items like clothing, footwear, laptops, okay? At the same time, the people who are generally supporting those types of policies are generally against higher minimum wages, which doesn't square as well. Because if you think that we're going to bring all those jobs back to the U.S. and we're going to have livable wages and we're going to have goods at an affordable price, can you work that one out on an equation for me? Because I'm a math guy, and those things don't all equal the same sum. It just does not happen. Yeah. Everyone's got their reply. And we're not talking about free speech. We'll leave it at that, okay? Everyone's got an answer for everything. You can square it. But that wouldn't be the answer, all right? EKS, you're in there. They're in there in the YouTube Tigers Den. Free speech is everything. That would not be your reply if somebody in the administration that you disagree with was going behind the U.S. government to have private conversations with Russian leaders that are asking for favors for Xi to influence international U.S. policies that the president of our country has instituted. All right. Now, let's get back to some of the market that we got going on here. Yeah, this one's an interesting one, too. We'll talk about this one afterwards. Let's jump around to some of the equities that we got moving in this market and see how we're doing right now. Look at this market. You talk about the upside, man. Tesla up another 3%. S&P's pushing 58.86 right now. NASDAQ 100 pushing 233 right now. We jump around to Apple shares. Talk about an acceleration. Up 0.5% after being lower in the pre-market. We check back in on that gold contract right now. Down just $7. I say just 7 because we were lower in the pre-market. The 10-year chopping around at about 4.18. We check in on the dollar right now. The dollar sitting just above 104. 104.02 is the number there. We check out some of the other equities that are moving so far this morning. Yeah. How about Colgate-Palmolive? They were out with their numbers. You open lower, you catch a little bid with this market. We're at 97.60 right now. And yeah, and what did they do? They beat on the top and bottom line of the third quarter. No, yeah, they beat in the top and bottom line in the third quarter. But nonetheless, the expectations were everything. You trade lower, you get it back. They're barely negative by about 2% right now in the pre-market. What else we got? Yeah, we talked about Skechers. Talked about Capital One. Yeah, this one's an interesting one when you talk about real estate. All right, DLR. Looks like leases are just doing fantastic right now. How about that one, man? This one is Digital Realty Trust. Okay. They reported record lease bookings for the third quarter, and they raised the top end of the full year revenue to $5.6 billion is the number there. And you check it out. You jump over to the Analyze tab. All right. They bring companies and data together by delivering the full spectrum of data center, co-location, and interconnection solutions. Yeah, secure data meeting place, improving data center Architecture. Yeah, so that's digital realty. So much for realty. No, that is digital realty. Okay, nothing to do with housing. That makes a little bit more sense. Global data center footprint of 300 plus facilities in 50 plus metro areas. Man, this data center deal, $62 billion company. There's no stopping, man. There's no stopping that one. All right. And how about Amazon? This story was out there yesterday, man. Amazon, if you're a Prime member, and many people are, you can get a 5 to 10 cent discount if you go to BP. Always interesting. They're in a battle with Walmart right now. Amazon up 1.5%. We'll come back, finish up the show, folks. We'll talk Amazon and Walmart. Don't go away.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets in positive territory and Friday action right now. S&P's up 0.6%. How about the NASDAQ 100? Up 1.2%. We're only about 300 points away from that high made in July of 20,983 right now. You got the Dow up 130 points and the Russell up by 10. So, yeah, jumping back to Amazon briefly. Amazon catching a bid today up by 1.7% right now. We jump over to Walmart shares, slightly in the red. They've been just a rocket ship, man. Look at this. There's like no pullback on this chart from $50 to $82 for a company like Walmart, and you have a lot of stability in a company like Walmart, so always amazing when you accelerate to that degree. But this is where I talk about, I love technicals, folks, okay? You better have the technicals on your side when you're trading, but you want the fundamentals too. And sometimes listen to yourself, and I've talked about early on in COVID, if you've been watching the show, you remember me talking about Walmart being a Sam's member and them dropping off these boxes that were basically just broken. There was popcorn everywhere, right? It was a mess. Walmart's gotten their act together, man. That does not happen anymore, okay? I order items on Walmart. I order them from Sam's. They can get delivered. I go to Sam's. You have scan and check out. It's one of the best features ever. I go into Sam's. I scan everything with my phone. I don't go to the checkout. I just walk out. They scan it, etc. And one of the other factors that I love about Sam's is they have gas stations there. And the line's a little bit long, okay? Sometimes, depending on where you're there. But I always say I pay for my Sam's membership just by getting gas there sometimes. Not even every single time, okay? Just by getting gas sometimes at Sam's, I pay for my membership and then make out along the way. And guess what? Amazon's like, you know what? Amazon says we got to start offering gas too. And they are. They've teamed up with BP, and you will start being able to save 5 to 10 cents is what it is. You'll be able to save 10 cents a gallon whenever you fuel up at a participating BP or Amoco station, okay? And there you go. It's a discount much like the one Walmart offers at Exxon stations through its prime competitor program, Walmart Plus. Yeah, they're locking you in, man, across the board. So we'll see where we go, but it's a big one, and the battle is on between those two companies, two great companies. All right, folks, thanks so much for kicking off your Friday right here. I appreciate the conversation. I appreciate the Discord. I appreciate you all in the den, whether I agree with you or not. Speak your mind. We'll get there. That's what democracy is about. I love you all. Thanks so much for contributing. Stay tuned. Our man Basil Chapman's coming up right now. Have a great Friday, folks. We'll see you on Monday.